Thank you. Thank you so much. All right. So CIELO, a little bit of about before we get started, actually, I want to do an icebreaker. So as you're coming in, if you can share in the chat box your name, if you already have a business or maybe are interested in starting a business, if you can share your business idea or your business name, that helps us to get to know each other a little bit better as well. And then include your business social media handles. So we also want to create during these workshops a community where we all follow each other and support each other as small businesses. So if you can share that on the chat as well. Another thing to be mindful of, if you don't have your name changed already as your Zoom user, if you have maybe something like iPhone or something else, it would be really helpful if you at least put your first name, so that way if you have questions or the presenter wants to call on you for something, that they're able to refer to you in your accurate name. So go ahead and share that in the chat, and then we'll go ahead and proceed. So what is CIELO? For those of you who haven't attended any of our workshops or programs yet, we're a nonprofit organization in Orange County, and we support aspiring entrepreneurs. So most of whom we work with is folks that are underrepresented in Orange County, maybe like really, really tiny businesses of 1 or 2 people. And we just help them to be what we call launch ready. We help build your idea and help you develop your plan. And more importantly, really get into that mindset of what it takes to be an entrepreneur in order to help you achieve your own success. We provide educational programs, one-to-one coaching and resources and guidance all throughout. But most importantly, you all provide that hard work and passion that is needed, because we all know it's not easy. So like I said, we do have our small business education, what we call our small business development training. And that's a general education modules for supporting any small business that wants to go through our program. We also have specialized training for anyone who's interested in specifically childcare entrepreneurship. We have monthly workshop series such as the one you're attending today. You don't need to be part of any of our programming cohorts to participate in our monthly workshops. So please stay tuned for through social media or through your friends so that you can keep connecting with us on a monthly basis. We have one-to-one small business coaching and just ongoing navigation and support for any resources that you might need along the way. And we also support with different micro grant availabilities and microloans for CIELO business startups as well. We are actually taking a little hiatus for the month of July, so we won't be having any monthly workshops in July, but please stay tuned for August. We will be resuming our monthly workshops in August. And then just as a reminder to keep in mind that we will be sending an email by the end of this week with this recording specifically, so that if you came in late or there's something that was missing or you want to share with your friends, we'll be able to share the recording of this presentation today. And then we will also share a copy of the actual presentation that Ana Laura is going to provide, and then her contact information. And then we will also send any other relevant information that pertains to tax laws that might be helpful to you. And then questions will be answered at the end. If you have any questions throughout as Ana Laura is speaking, you can also just put them in the chat and we will do our best to answer them. If not, we can pose them as questions to Ana Laura towards the end as well. So, but feel free to put your questions on the chat or just ask them at the end. And then now I will present Ana Laura Padilla, who is a tax advisor for Themis MultiServices. I will let her present herself and tell you a little bit more about what she's going to be talking about today. Let me go ahead and stop sharing my screen so she can go ahead and start.
Well, hello everyone. My name is Ana Laura Padilla. I was looking into the chat and I think I have another Ana Laura here. So that's exciting because I don't get to meet that many Ana Lauras. So welcome. And yes, my business is called Themis MultiServices. And I do tax advising specifically for business owners and those ones who are barely starting with their business. So I really hope that all this information will be helpful for all of you. I know sometimes taxes is a little scary. And it's something that we don't take into consideration because we're just so excited to start our business that then we forget. So I hope I give you with this presentation some tips and some things to consider. And I make it fun and I don't make it so scary. So let me share my screen over here. Okay. Let's see. Okay, great. So, like I said, this is me. In 5 things that I will be focusing on today, I'm going to try to explain the benefits for business owners in regards to tax savings and deductions. We're going to be doing a quick comparison of business entities, the different type of entities that you can choose depending on the business that you're going to establish. What are the big deductions and the credits available for business owners? Also, how does payroll or paying yourself as an owner of a business work? And the last one, it will be how can you start navigating into that tax planning in your business? Oops. So, okay. So let's start with the business entities, because if we start from that, we'll be able to deviate from the rest. So for business entities, I don't know if anyone is familiar with that terminology, but it's pretty much you decided to start a business. You decided to start selling cupcakes because you're a really good baker, right? So you were before doing your taxes as just a W-2 employee because you were probably working at a bakery shop, and that you were just going from 9 to 5 or whatever your hours were, and you were receiving a paycheck. And whenever you went and see your tax person at the end of the year, then you would just bring that W-2. You had already advanced paying taxes for that. So you either get a refund or you either make a payment if you did not pay enough during the year. But when you decide to open a business, now there's the dynamic a little bit change. So sole proprietorship is like, it's just me. I just decided to enter into this adventure. So that's what sole proprietorship is. Partnership is like, it's me and my really good friend, or me and my mom, or me and a family member. So it makes 2 members of the business that are sharing a business. That is what it's a partnership. Then the famous LLCs is a limited liability company. That can be also created with just 1 member or different members joining forces to create a business. And the limited liability company is most likely when you have more than 2 members, because then you cannot have a partnership anymore. It has to be something else. And then we have a bigger structure, which is a corporation, and then an S corporation. And just to dig in a little bit on that and the tax savings on that, I have a couple of guys, but this one looks so little. So make your notes, because I'm going to give an example on that. So you decide to open your business, and for example, you are making and start writing this down so it's easier for all of you. So you decided to this one, I don't know if everybody can see it. Hold on, this. So we have the different entities over here, so it's easier for me to kind of explain it with more money. Okay, so your business income for the first year was at $200,000. Those were your sales for the entire year, right? So if you keep yourself as a sole proprietorship, one of the tax benefits that you have is the qualifying business deduction, the QBI, and that's like a credit of $40,000, meaning that instead of your taxable income being $200,000, it's just going to be $160,000. So your income tax for $160,000 will be $52,800. Okay. Because you are being just a sole proprietorship, you have an extra tax now that is called the self-employment tax, meaning that you are working for yourself and you don't have an employee. So you're pretty much generating your own money. So that self-employment tax, it varies depending on if you are filing your taxes married, single, if you have kids, if you have any other credits, but it's mostly 30 to 35% of your taxable income. So we have over here a self-employment tax of $28,000, right? You don't have any dividend tax because that's for other type of corporations. So your total tax liability just right here as just keeping it as a sole proprietorship will be $81,000 out of that. So as you can tell, it's pretty high because it doesn't give you that much credits. It has a very high tax because of the self-employment tax that you have to add. So the liability will be pretty high, right? What if you decided, okay, I really want to protect my business, not only legally, I am not an attorney, so I cannot give you legal advice, but corporation at some extent reduce the liability of your business, but I can give you like tax advice. And in this specific scenario, we have an S corp. Just by making the decision of changing the entity of your business, you have the same scenario, but you will be reducing your tax because you will be able to get $33,000 on a credit called QBI. So that is not deducted over here, but it will be $81,300 at the end of your total tax liability, minus the $33,000 from your QBI. That is most likely that you will qualify for it. So you're talking about $47,000. That is what you're going to be paying on tax liability. So you already cut your tax liability on half just by knowing what type of entity it's better for your type of business. And then if we go to a C Corp, everything is applied to there too. Of course, a C Corp only pays 21% of taxes on any profits, and it never changed. You can be making $50,000 on profit, or you can be making $1 million, and you always just gonna pay the 21% of that. So if you can see over here for a C Corp, you're looking at $65,000 on tax liability. So even a C Corp is a way better determination than just keeping yourself as a self-employed. The biggest tax over here is the self-employment tax. That's the tax that you really have to consider before opening your business, because that's one of the highest tax that we have. And we're used to, every time we do our taxes, to an ordinary tax. So ordinary tax is pretty basic and it's not as high, but self-employment tax tends to be 33, 35, 39% sometimes, depending on each in each case individually. So I just wanted to make this like super quick comparison so you can see with numbers how it's very important that whatever you decide to open your business, this is the type of decisions that is better to do sooner than later, because if not, you're going to be carrying a higher tax over there. So do we have, I feel like we should do questions in each section just in case, because I don't want to keep on moving forward and people have questions on this. So I'm happy to take questions right now.
I have a question, but I'll wait if there's any other participant. Okay, so my question, Anna, this QBI you talked about, does that amount, does that change every year? Or is that like just when you first?
No, yeah, thank you for your question. QBI is 20% of your taxable income deduction. So it's always going to be 20%. It can change. The thing with taxes also, we have a new tax law every year. So us, like the ones that are in this business, we have to keep on going to school every single year to renew our tax license, because we learn the new tax brackets for the year. So QBI can change. It's a percentage always. It's never like if you see $40,000 out of 200 is 20%. And I'm going in the tax tables that we have this year.
So
Mhm.
20. So it's the percent, there's always going to be that percentage.
It's
And,
always going to be a percentage.
and that's deducted from what you make in the year. This,
Is deducted, yeah. So $200,000, the example that I put right
Yeah.
now, right there is just to say that that is your taxable income. So let's go what taxable income then income is. So your taxable income is the profit that you had after already deducting all your expenses and going. And right now, the second part of the presentation, I'm gonna guide you on how do we get that taxable income, because that doesn't mean that that's what you sold the entire year and that's all taxable. Taxable is only what you profit from it. Mhm.
Thank you.
You have two questions, so it'll be Anna and then Roberto, and then you have one question in the chat that I'll ask you afterwards.
Mhm.
Hi, twin by name. My name is Ana Laura too. Nice to
Oh,
meet
nice
you.
to meet you.
And I heard about you, believe it or not. It's a funny coincidence. All right, nothing is a coincidence. But I think you answered my question as you were answering Jessica's questions. You did about the amount of money. You know, it all depends on the profit. So the earn. That's what I was wondering about. Yeah. Thank you. That was it. So you covered it. Appreciate that.
No problem.
Roberto, did you have a question?
Sorry, I dropped my phone really quick. Hola, buenas tardes a todos. So my question is about keeping account of everything that I'm selling and I'm working and expenses and all that kind of stuff. I'm currently using QuickBooks, and I don't think I'm doing a good job of that because it spent like 30 minutes and I quit and it just go back to the stuff that I've been working on. So I was wondering if we can talk about maybe later during your presentation. I don't want to break your flow, but maybe we can talk about everyone here I'm pretty sure everyone here is good at what we do, but not at the administrator side of everything, right? So that's maybe some tips and unos consejos que nos puedas dar.
No, and I feel like you hit it off perfectly. One of the things that I always tell my clients when I have my first consultation with them, it's you do what you're passionate about because you're gonna do great. And sometimes if we try to do everything to sustain our business, that when we burned ourselves and we're not being as productive as we should, right? Because now we're trying to be the administrator, now we're trying to be the tax advisor for ourselves, and now we're trying to keep everything in shape. So my recommendation for that, of course, I'm going to give you tools for you to understand what's taxable and non-taxable and what will be a deduction and not a deduction, but it can be very overwhelming. It's something that you don't learn right away, and especially like a baker. A baker knows how to bake, and that's his passion, and he is going to make beautiful cupcakes to sell. So maybe a baker will not understand the back end of the business. And that's what I will always suggest people, even though there's amazing tools out there like QuickBooks that you mentioned, that Excel worksheets, like many things, it's try to budget yourself. Visit that tax advisor. At least for me, when you visit me, I'll give you a full explanation of what my services are, what savings I'm going to bring to your table, because from those savings, you will be able to pay my fees. And sometimes if you see it that way, sometimes people is scared because they think it's going to be too expensive, but they cannot afford it. Sometimes it's not that expensive because I can do what it takes you days to do in a couple of hours because I already have the experience, and that's what I do on my daily basis, right? So maybe you are losing profit there because you're not able to focus 100% in your business, and instead of like just like giving that opportunity to an expert or to whoever you know that does accounting and give them that job, because sometimes small businesses, we can give you the tools for you to do it if it's not necessarily that I have to help you and it's going to be easier, or we can do it for you in a quarter basis, in a monthly basis, whatever is your need.
Okay. Yeah, I have a couple of follow-up questions. Can I interrupt? Yeah, can I go ahead?
You have like another couple
Yes.
questions on the chat as well. So, would you mind if I ask those other ones? And if you still maybe have that question, Ana Laura could answer it.
Of course, of course.
Okay, so you have CC asked, so it's better to go with anything but sole proprietorship self-employment for taxes?
So that's a great question, and it depends. Fortunately or unfortunately, with taxes, it's very impossible for me to just give you a full idea on everything, because it really caters to what are you doing. When I give tax advice to a client, it comes with a bunch of questions. And some of my clients think that I'm a chismosa, but it's not that I'm a chismosa, it's because everything matters, right? So first of all, I would like to see how you've been filing your taxes. Are you married? Do you have kids? Do you have a house? Do you own any assets? So when I have this questionnaire already filled out, then I'm able to tell you. And then when I learn what your business is about, if you are in the retail, if you are in the restaurant business, if you're in the consulting business, and you're in the professional business, depending on what your business is, then I'm able to give you an exact answer and tell you, you know what, for tax purposes, this is what I will recommend. And I will do a little table just like the one that I did right now for yourself. This is where you stand right now. This is approximately how much you're going to end paying if you keep it this way. This is what we can do. We can jump into this, and then the decision, of course, is always the client's decision. But unfortunately, there's no way for me to answer that that question if I don't know a specific scenario.
Then you have Meg asking, what is the best way to determine whether to stay a sole prop or go to an S corp? I think
Doing a full analysis of your business, doing a full analysis of your personal taxes as well, of your assets, your credits, how you're filing, to be able to make the right determination.
Thank you. And there's Eduardo asked, is it the same 20% for a single member LLC? Question mark.
I'm trying to think if that 20% you're talking about is the QBI. And if it is that, yes, QBI is 20% for every single type of entity. The only one that doesn't carry that QBI credit is a C Corp, but that's a completely different entity.
Brenda, do you want to ask your question aloud?
I just wanted to ask if you process, I know that only certified accountants are able to process S Corp or the C Corp. I was wondering if you do those.
Not only certified accountants are able to process the C Corp and an S Corp. I do process and register with the Secretary of State to process C Corps, S Corps, and LLCs. And I also work directly with an attorney firm those are the ones that create the bylaws, because that's the legal part of your entity. I'm not an attorney, I'm not able to create those for you. But I do work with an attorney firm that they create the bylaws very specifically for each business that I create, and I just create the entire body of it for the tax purposes.
And
Thank
then
you.
Jessica asked, would you agree that a single member LLC should convert to an S Corp only if it makes 80,000 or more profit in a year?
Like, again, that's a great question. It just depends. A single member LLC, to be able to do a determination if it will be better to be an S Corp, I will have to see how much of self-employment tax are you paying. Because sometimes single members LLCs are filed under Schedule C, which it goes directly to your taxes, and that's the self-employment tax that we're trying to avoid. So if I see that you're paying through your single member LLC that self-employment tax, then probably it will be a great solution to that same LLC. You can make the conversion to an S Corp. Just have to ask the IRS to make that for you, and a tax advisor can help you with that.
Thank you, Ana Laura. You can continue your slides.
Okay. So, okay. So now deductions and credits. So when you see, let's just go back to see, I have a little bakery shop and I'm selling cupcakes, right? So in the entire year, I sell $100,000 on cupcakes. That doesn't mean that those $100,000 are my taxable income, right? Because I did not pocket those $100,000 and they're in my account. Those $100,000 had to be like my gross sales, and then I have to go down to see how much it cost me to make those $100,000. So for that, we have different expenses and deductions that we can talk about. I just put key elements right now in this, even though I'm going to be talking about more. But for example, one of the things that many of the new business owners don't know, or sometimes they don't let their tax advisor know, is the investment or the operating expense that they start the business with, right? So for example, for me to be able to sell cupcakes, well, I have to buy all these supplies. I have to make sure that I have enough money in the bank to buy all the supplies. And if I have a helper, to pay that helper. And I'm not even going to open my shop until 2 or 3 months from now, because we're decorating, we're painting. Or even if I do it from home, I have to restructure my kitchen, or I have to get new supplies, right? And then I start selling. And then I don't consider all those operating expenses and all that investment that I'm carrying since the minute I got an idea that I needed to start a business. So it's very important that I always tell my clients, do it as a diary. You don't have to be an expert. Just start writing down. Today I decided to open a business, and I decided to buy these because I'm gonna try to make 5 different cupcakes at home to see which one I'm gonna have on my menu. Those are expenses. Those are investments that you did to be able to generate revenue in the future. So it's very important that you keep a diary, that you keep a notebook, putting all those things that you invested in the beginning, because when you open your business and you start selling, you can pay yourself back from that. And that has nothing to do with being taxable. So it's a huge deduction that many of the new business owners don't take into consideration because they didn't know about, right? So they just start making expenses as soon as they start getting money. And that is wrong, because before you start selling, before you start making money, you had a huge line of expenses beforehand to make it happen. So it's I always like to share that because it's the position of many of the new clients that I have when they started their business. So they lose a lot of deductions. And when you lose deductions, that means that you're paying more taxes because your taxable income is bigger. And sometimes it's okay. Like the thing is to reduce that taxable income the more that we can with deductions, so our taxes can be lower. Travels and meals, all that is tax deductible. Like I said, we now as a business owner, you can depreciate any assets that you have to buy for your business. And what are assets? Like tangible things, right? Like I bought my computer, I bought a printer, I have to buy like an oven to do the cupcakes, I have to buy a mixer. All those are assets. So all that is a deduction. And even if you use some of the things that you already had at your home because you're barely new and you don't want to buy anything new, that has a cost too that you can deduct on your taxes, because it became now to be business property and not your personal property. And then we have some other credits depending on, like, again, this is very catered to each line of business, but we have work opportunity tax credit when you are growing and then you're hiring certain individuals. There's some credits there. Then we have research and development credit too on taxes. These two credits are like when you're a consulting firm or when you are a professional firm, and then you have to enter into research to be able to cater to a specific client and you invest some money there. There's a big credit on all the, like the startup developing on the software, the new software that you have to acquire to be able to complete this research, to supplies or to professionals that you pay to be able to do this research for you. So the credits vary every year, and also like there's credits that go in and out every year, depending on the IRS guidelines for the year. But these are two credits that I like to talk about, because many of us, like now with the technology, right, we have to buy new equipment, buy new things to be able for our business to work. So these are really good credits to take into consideration. And again, like these credits, it's good for you to bring them up to your tax advisor to see if you will qualify. There's certain questions that we have to ask you, and there's certain scenarios we have to consider to see if we can save you some money in there. So my suggestion will be that, like always like talk to your tax advisor and be like, what credits are catered for my lineup of business? Because like I said, different business carry different credits. So do we have questions so far?
Roberto had a question. I don't know if you still have it.
Okay, I feel like the chismoso this time because I don't want to take everyone's time, but my question is related to my business, and it's basically one of the things that you mentioned about the credits. I tend to hire a lot of people overseas and South America as well. I do a lot of web design and mobile applications and web applications. The main designer, so I design everything. I hire developers to work on my stuff. So are those? Do you know by any chance? And I think this goes to a deeper conversation. Maybe I can make an appointment with you. But do you know if those credits also apply to international vendors?
Yes and no. It really depends. There's a series of questions that I will have to ask you, but most importantly, other than credits, I'm curious to know, how are you categorizing those expenses? Because they seem to be self-employed, but because they're like I would like to call them self-employed or consultants, they're providing you a service. So you have to make sure that you get invoices from them so you can deduct that from your business and you're not carrying on that profit. Because sometimes we are just selling people, right? Like, oh, I'll send you a cell for your service, or I'll just do a wire for your service. But the thing is that to have the proper documentation that we need to be able to deduct that. I don't know if that will work for credits per se, but for sure it's a big deduction that you're having if you're hiring people overseas or wherever you're hiring. And the IRS allows you to hire people wherever you want. It's just that as long as you have the proper documentation that you will need to make it a deduction, that's my only concern with that for you.
Yeah, I don't think I have what you might think as some proper documentation, only receipts from them. And those receipts are made out of, I don't know, PowerPoint. And I pay whatever they ask me to be pay, and I add it up to the whole total. At the end of the year, I'm still struggling putting everything together.
Yeah, and no worries, all that can be fixed, like I said, and that's the reason why I'll suggest you, like, if you like my presentation, or even if you just want to come meet me and have an appointment, like I can give you pointers and I can just make sure you can create your own contracts, and it will be also depending on the type of entity that you have, then I will give you suggestions on what to do for that.
Thank you.
Yeah, let's take the conversation on the side. Thank you.
You have Cece with a question, and then you can also take a look at the questions on the chat if you want to answer them now or at the end.
Hi.
Oh, yeah.
Sorry. Hi, I'm Cece. I was wondering, because I have a tax advisor and she does my taxes. She helps me with like writing off office space in my house and all that. But the thing is, when I asked her if my expenses were like deductible, for example, like an embroidery machine, the software, all of the materials, and all of those get pretty expensive, but she says that I can't write those off. And I'm just wondering if that's true, or if maybe I just need more like a different advisor, or how that works.
Look, every advisor have their ways. I think that everyone that we do this job, we always try, at least I'm talking for myself, I always try to do whatever is best for you. It seems that they're 100% deductible. It just really depends the type of entity that you have. Because sometimes tax advisors don't like to deduct those things when they're doing a sole proprietorship or when you're just doing a Schedule C. They might don't know how to depreciate. They might just want to do a quick form. I don't know what the case is, because if you're in the embroidery business, those are deductions 100%. And I'm going to tell you something else. If you have a home office, you have no idea how many deductions you have. For example, you can deduct up to $5 per square footage of your office area at your house. That's one of the bath. You can, and it can be over 300 square feet for 300 square feet, right? Then you can deduct part of your internet bill if you're using it for your business. You can deduct part of your electricity bill because you're also using it for your business. And there's just all these type of deductions that you think you're using it like personally, but they're also benefiting your business and you're making an income out of there. So it's a little bit harder when you have a home office, but I always like to dig in. And I always tell my clients, okay, how many rooms do you have in your house? Okay, we have 2 rooms. 3 with the living room, and I use a space on the living room. Then I divide the rent on those 3 rooms. Then I see how much square footage you have in your living room for that office space. We multiply it by $5, and then you have the rent that your business should be paying to you, or that you should be deducting from your business, because that is an expense that the business has. So not because you're doing it out of home, that doesn't mean that it acquires expenses and you're not making per se all the money free without expenses. So it's very important, like again, to read more about the home deductions, but specifically on equipment, there's something, I'm gonna put it on the chat so you can look it up. Let me see. Are you Meg? Or who asked me the question?
Cece.
Oh, CC. Okay. I don't see you in the chat, so I'm just gonna put it there. CC, look for section 179 with the IRS. So what section 179 is instead of depreciating your assets on the life of the asset, for example, computers have 5 years life. So that means that whatever you spend on a computer, you can deduct it within 5 years of your taxes, right? Sometimes if you spend $1,000 divided in 5, then that means you have a deduction of $200 and something a year. So sometimes that doesn't help you. So when they're small investments like computers, like an embroidery machine, like something that it didn't cost you like crazy amount of money, I like to use section 179 and deduct it all in just 1 year. If it's beneficiary for you. If in that year you had a really high profit after all your deductions, and then I use section 179 to reduce that profit, so you have to pay less money for taxes. But I repeat myself, like this is in a very unique scenario. Like I will have to do a full understanding and see what your profit is to see if something like this will be beneficial or not.
Thank you.
Thank you. Ana Laura, you have a couple questions, so I wanted to ask if you have anything else that you can share on your slide.
No, I'm going to stop sharing my screen because my presentation was very basic. Like I said, I wanted to do it more interactive with all of you because I feel like giving you just the general idea of this, then we'll learn by the questions because that's like that. So yeah, go ahead.
Okay, perfect. So I'm gonna ask you the 2 questions on the chat, and then I'll go to Roberto and Angela because sorry, I know the chat questions have been there a while. Let me go ahead and do that. So I know you had a question on, let's see. Oh, so Martina, I think. It says, but isn't the self-employed tax going to fund SSN and Medicare, etc.? So isn't self-employment tax a valuable tax in the long run?
Yes. So for that question, I love that you answered that. And it is, But let me show you, I put you this very comparison exactly for the self-employment tax. So sole proprietorships with a self-employment tax will be paying 12,000, like on a profit of 100,000, 12,400 for Social Security and 2,900 for Medicare. Okay. So let's say that if you become an S corp, or if you change your entity to an S corp instead of a sole proprietorship, and you put yourself into payroll, right? You put yourself as an employee of your corporation, then you pay yourself $60,000, right, on employee wages. That means your Social Security tax from 12,400 just went down to 7,440. Your Medicare tax went down to 1,740. And the only added tax that you have to that is your federal unemployment tax for being employed by yourself, and that's 420. If you add that, that's way less than your self-employment tax on the sole proprietorship side. You know, and I have another scenario with just paying yourself $40,000 instead of 60,000. So you see the big difference in this table of what I'm talking about, why self-employment tax is always gonna be higher. Yes, you're gonna be contributing to your social and Medicare, but there's other ways where you can contribute to your social Medicare by just lowering that money and just determine certain amount of money to go there. And that's by creating an entity and putting yourself into payroll. So great question, and that's the reason why I had this little table on the presentation.
Thank you, Anna. The other question is from Meg. I think she asked like a two-parter. One, she said, curious about home office tax deduction. Is 300 square feet the max? And should we provide an annual cost of utilities so a percentage can be deducted?
Correct. So yes, you should provide to your tax advisor the annual cost of your utilities and explain what utilities you use for your business, and they will be able to cater to the percentage that they might think you qualify. All that is on the side of the people that is doing your taxes. For a home office, it's this year was limited to $5 up to 300 square foot. But again, if you're using more than that and you're proving it, then there's other calculations that as tax professionals we can do to give you a better saving.
Thank you, Anna. Let's do Angela and then Roberto.
I just question with the home office write-offs. I had heard that it could impact the equity upon sale of your house. And so I guess I just wanted to just ask you about that. So if I write it off on my taxes as a business write-off, when I go to sell my house, that's going to be taken into consideration with the proceeds?
No, it shouldn't. It shouldn't, and I will ask you to consult with a real estate for that type of question. But on my expertise and what I know for taxes, it shouldn't, because your house value, it doesn't matter because you're deducting just a part for your business side. No, yeah, I wouldn't see how that will affect, honestly.
And are you familiar with Rob's rollover business? Do you work with the Rob's, the 401k rollovers for business?
Yes.
You do. So okay. So if I wanted to set up something with you specifically for the C Corp side, you know that. Okay.
Yes.
Yeah.
Yes.
Okay. Thank you.
Thank you. Then we have Roberto.
Thank you again for taking my question. So related to help around my business, sometimes my son and my wife helps me with administration. My son helps me with photography or social media. And I pay them, just here's something for you, here's something for you. Yeah, my wife takes most of the money, but I try to make it fairly. But so anyways, is that something that we can deduct? And also related to that, could you also talk about, because I've seen a lot of videos online where it says if you put your baby in your business, you're gonna get all this much money. If you put your kid, your dog, your cat, you're gonna get all this much money. So Before you
that's a
start
great
putting everyone,
question.
yes,
Like again, I go back, Roberto, I think you have to come and see me soon because yes, that is a deduction. You can put a minor on if it's your son or your family, you can put a minor to pay him up to $12,000 on payroll. But that's the thing, it doesn't seem that you have a payroll. It seems that you're just selling them money, sending them, so they are responsible for paying self-employment tax on that money that you're sending them. And then if you're sending it to your wife and then you're filing with your wife, you're just pretty much passing the money here, but you're creating the same tax liability over there. So that's the reason why your business structure is so important, because if we set aside another type of business structure, then you can separate. Okay, wife, right now you're working for me and here is your money. It's going to be better for our personal finances to pay you as my employee, or it's going to be better for our personal finances to pay you as a self-employed? I don't know the answer because I don't know your specific situation, but it's many things that you're going to find in the way. And like, I mean, I didn't talk about having a kid in the payroll because again, there's so many deductions, so many things that we can utilize, but it really depends on the profit that you're making. What's your tax bracket? The most important thing is understanding what your tax bracket is, so then we can come with ideas of how to reduce that.
Okay, yeah, definitely I'm gonna have to go see you.
Yes.
Can you tell us where you're located?
I'm going to be sharing that information at the end of the conversation.
Thank you.
Just as a reminder, you all will be receiving this recording for this session, plus Ana Laura's presentation, plus her contact information by the end of the week. So you should have all of that information just in case you also weren't able to take notes or whatnot. You can always have that later. I know we have some questions on the chat. So you have, does creating an LLC and giving self a salary reduce tax liability as well?
Yes, but it's tricky because if an LLC, you're going to be the a single member, then you don't have to put yourself in payroll because you're carrying all that into your, in that specific question, I will say create an LLC, and then get the IRS approval to treat it as an S corp, so then you can put yourself in payroll, and it will reduce your tax liability. Yes.
Thank you. And then the other question is, are we allowed to pay our kids? If so, will payroll taxes or payroll insurance go higher?
Depending on the age of your kid, payroll taxes might not go higher, and payroll insurance won't go higher either, because workers' comp will not, you don't have to put them on your workers' comp. You can just make them part of your business, so you can avoid paying for that workers' comp, because hopefully they're not going to sue you.
Thank you. And then Anna has a question.
Hi, I like to go by Ana Laura, but I know I put Anna on Zoom. That's actually my full name. Not to be exaggerating, but
No, thank you.
I just wanted, I'm just really curious. I know you prepared this presentation with more slides. So I was wondering if you can kind of touch up on some points if we have not talked about them here, because I am curious, I'm pretty sure that, for what I hear you say is case by case, every tax situation is case by case, right? Whether it's you own a property, whether you lease. And I mean, I can imagine I have questions because I have a storage, for my inventory. So I'm really curious to know what's in those slides, and if you can share a little bit more, and maybe we can hold off on the questions to the end, if it's possible, because I know we're running out of time.
My presentation is pretty much over, because like I said, this is the way that the presentation, because it's so like every single person has like a very unique. So I would love to answer like that way, because like, again, if I had to do a presentation, all the tax laws, we'll be here for hours, and my slide will be huge, right? Because there's so many. So it's better for me to explain the needs of the community all of you have, and cater to those answers, because I didn't know who was gonna join in. I didn't know what type of business any of you have. So that's the reason why I just try to make it super short so we have more time for questions and answers.
Thank you.
And like I shared, you will have her information. So if you want to make like a consultation with her, you can always do that as well. You have two questions. Single member LLC should file as an S corp ?
Sometimes they should. It just all depends again, how much is the profit, how big is the business, what's your situation on your personal taxes to be able to do that determination.
Thank you. And then Jessica asked, are you familiar with the California LLC's franchise fees? I claimed a startup cost on my 2022 tax return, but I didn't register my business as an LLC until 2023. Do I have to pay the $800 California LLC franchise fee this year, or is it waived and I pay next year?
You do have to pay the $800. So with the franchise tax board, you pay a year in advance. So those $800 needed to be paid already. And that's the minimum tax from the franchise tax board, $800 if you didn't make any profit, or if you make a profit up to a certain amount of money. And then if you make a bigger profit than that, then it's not $800 anymore. It's a percentage. It's a little bit more.
Thank you. Cynthia asked, I am planning to open a suite as a nail tech. How should I file for taxes?
Well, the questions that will be technically for you, it's like, do you already know on average how much money you're going to be making? How are you filing your taxes right now to make a determination if we make it into a sole proprietorship, or it will be better for you to incorporate into any of these entities that I've been discussing? So like, again, like to answer that question, you have to answer to me like different questions, but definitely like seek the advice of a tax advisor and let them know. And the only thing that I can tell you right now is start making your journal and start putting all the money that you're spending to be able to open that suite right now.
Thank you. And then Beatriz asked, I recently registered as an LLC, but haven't done anything with it. Is it better to convert to S corp?
I mean, how would I know that, Beatriz, with everything that I've been saying? Like, it would be better, maybe. It just really depends. Are you single? Are you married? Do you have kids? How much profit are you making? When do you open this LLC? Do you already pay your initial filings? So yeah, there's many questions again to make a determination to make it into an S corp. Do you have a full-time job? That's another thing. Some of us are starting our business aside from our full-time jobs, and we're just doing it on the side to generate more income. That's a huge thing because you're already providing income on your taxes, on your personal taxes. So it's a huge thing to determine how are you going to bring that other income.
Thank you, Ana Laura. We have also Claudia asking, do we have to keep all receipts for the initial investments that we make, or would the diary be enough?
It will be way better to keep all receipts, and it's super easy. Sometimes you just have a phone, create a little file within your pictures and just take pictures. Take pictures of everything and dump it into that file, because I know it's hard to keep receipts. But it would be better to keep receipts, especially if you're paying cash. If you're paying cash, definitely keep receipts. If you're paying with your bank account, sometimes it's easier to track because you will have the transaction there. But I mean, with your journal, we can start there. And but yeah, definitely keeping receipts is key.
Thank you. I know we're at 5 o'clock already. Ana, do you want to ask or Ana Laura, do you want to ask a final question?
I
No,
do,
like,
because I just remind.
There you go.
I do, because this reminded me the receipt. Oh my goodness, that is one of the issues. I have sent my receipts. Some of them even erase themselves, because they're printed on the paper that eventually becomes blank. And then I did think about the QuickBooks situation. I do it kind of the old-fashioned one. I keep them in a separate thing, and that is one of the most challenging things to keep track of, your receipts. Oh my goodness. Is there a program that you recommend, or just go ahead and or create it on a log? It's kind of like having a checkbook, right? write it down, whatever, write it down. What is
Yes.
you, what have you
To
found to
be-
be more
Yeah.
productive and beneficial for a business owner?
Yeah. So QuickBooks is a great tool. It's a great tool. It's just a very complex tool sometimes to learn. I give my clients every time they come, I always send them to Staples. There's this accordion folder, right?
File? Mhm.
Yes,
Yes.
that keep your receipts intact, and I label them by months. Or sometimes when they want to challenge themselves, I label them at different deductions like rent, gas, electricity, or meals, or whatever might be in supplies, etc. Right? And I make them put them there, and they bring that file to me every month or every 3 months, depending on the service that I'm providing for them. And sometimes I scan them all to have their electronic file on my computer. Sometimes I just create a paper file, but just so you know, audits can go all the way back to 5 years. So that's why it's very important that I know it's a heavy job to do and it's tedious to do. But if you create a system, it will just make it simpler. And if you have those receipts, I always tell them by the end of the week, just put them all on a folder or just scan them all. It's very important. Like if you are the type of person that has a lot of receipts because you're constantly buying stuff, and if you're not keeping it on your bank account, or if you're just paying cash for it, then buy a scanner, scan them all so they don't, they don't dissolve with water or anything.
Yes.
Or another thing is that many bank accounts now offer you the service of you making notes on each transaction.
Categorizing it.
And put that.
Yeah.
So sometimes that's even easier because there's something that you don't have to spend on, that you just have to spend a couple of hours going through your bank statement and make sure that you're categorizing everything.
Categories. Okay, I think you definitely answered my question. Thank you, because that's one of the challenges for me. Thank you.
problem.
And the categories, always they overlap. Sometimes it seems to
Yeah,
overlap.
just visit a tax advisor. Like I always give my clients, when I feel like they don't need to pay me to do the accounting, I give them a binder. And on that binder, like they will find different categories, like for their type of business. And then I teach you, like, okay, like this is what you're spending. Where will you put it? And it's just like a one-on-one conversation sometimes that you just have to have for me to make you understand what is the deduction, and then for you to just keep yourself organized.
Thank you, Ana Laura. Well, Ana Laura, our presenter. I feel like I'm going between both of you. Do you have any final words of advice? Any plugins that you want to share with the group?
No, I just wanted to say thank you. Thank you for being an interactive audience. This is exactly what I needed to be able to share my knowledge with all of you. And just don't be scared. Don't be afraid to also seek for the help of a professional. There's many professionals out there, including myself, that we're not that scary and we're not that expensive either. Because sometimes I know we try to save, but when it comes to taxes and making the right decisions when you start your business, I believe that is a time for investment, because you will see that investment get back to you in a form of savings and in a form of you not breaking your head so much into trying to understand everything. So that will be it. I hope everybody enjoyed the presentation. I know Lisette is going to be sending my office number and my address. So it will be great if you want to schedule one-on-one, and I would love to meet you all. And I'm just here to help and answer any questions.
Thank you, Ana Laura. If y'all can stay like 1 second, I would like to see if y'all can turn on your cameras if you're comfortable, so we can take a quick picture to share out. Like Ana Laura said, I will be sharing this recording with everybody by the end of this week, which will contain Ana Laura's presentation. It'll contain her contact information, the actual slides. And more importantly, you'll keep in touch with us now that you've registered for this presentation. You'll be receiving alerts, and you'll be able to continue that connection with our monthly workshops. So if you can go ahead for a couple seconds, just turn on your camera if you're comfortable so I can take a quick picture. All right, I'll say ready. I'll count down. I still see some people turning on their cameras. All right, I think we're good. Okay, 3, 2, 1. All right, everyone looks like models. Thank you so much. Have a great rest of your evening, and thank you, Ana Laura, for your wonderful presentation.
No problem. Thank you all.
Thank you all.
Thank you, Anna. Thank you, Ana Laura. That was great.
Thank you.
Thank you, everyone.
Ciao, care ladies. Hi, Dori. Hi,
All
Miriam.
right.
So much.
Blanca, thank you for being
Gracias.
here. Gracias,
Thank
chicas.
you, Lisa. Nice meeting you. Nice seeing you again. I saw you at that event for with Luis, Mia.
Oh yeah, no wonder you
That's
look so
me.
good here.
I just don't. I'm not in a dress and with those glasses.
No
Yes,
worries, no worries. Thank you for
Yeah.
coming.
Yes. Thank you. Nice to see you again.
to
So
see
we'll be in contact. Looking forward
Yes.
to that email.
Yes,
Bye,
for
everyone.
sure. Bye.
Thank you. Bye-bye.
Hi, Joanna, Danny. Might see the ladies.
I usually stick around for a couple minutes. I'm like,
Hi, Joanna. What do I see? Danny. Good job, Anna.
Hi, Jessica.
Hi, Bertha. Look at you. Are you at
Adiós, adiós. Adiós, ahí está, ya se me olvidó el nombre.
Jessica?
Jessica.
Ah,
Bye,
qué bueno que
gracias,
estuvo aquí,
Jessica.
Olga. Ok, bye,
Ok.
Danny.
Bye.
Bravo, bravo.
yes.
Bye, Danny.
Bye, Joanna.
Bye.
Dice, ok, pues ya me voy.
¿Aprendió algo, Joana? ¿Aprendió algo, Joana?
Ay, pues ni papas, pero,
Ah,
pero ahí más o menos entendí,
Ok, ok.
porque esa es la clase que más uno quiere, pues la de los taxes.
Y no se preocupe, vamos a contactarlos en español.
Ok,
Yo repaso algunas
excelente.
cosas con ustedes. Y a ver si Ana, vamos a ver si Ana agarramos.
Y también la hago en español.
ya
Uno-
ves, Ana Laura lo puede hacer para los de childcare.
Yes.
Ok, perfecto. Muchísimas